Hi, this is Dave. Welcome to the weekly market recap, closing out the week for Friday, December the 6th, 2013. So let me just expand out the daily chart here of the Dow futures, and let's zoom in a little bit and see what happened this week. So you can see that we had a pullback. This was one of the deeper pullbacks that we've had. If we take a look at this chart, once we broke out of this sort of consolidation area here, this was one of the deeper pullbacks that we had. We got out of this range here, and once we broke out, you can see that we were, let me just change the pen here. We were, the pullbacks were pretty shallow. This was one of the deepest pullbacks that we've had in quite a while, and then you can see that we seem to have put in a short-term low here off of this level. Let me just mark this level. This was approximately 15,784, and then on Friday, as would be expected, Fridays usually in an up market usually close pretty strong, and you can see that we pushed up on Friday. We didn't break through the all-time highs, but we did get above this the high of this low bar here, where the low was 15,784. So this is what you would expect for at least a short-term continuation of a trend of a pullback. So you had the pullback, we had the pushback up, and you can see we were talking about this candle going into the close of last week, and saying that this is usually indicative of a short-term pullback, but we weren't really quite sure what kind of pullback we might get off of that because of the the shortened holiday trading, and because of the the holiday volume, the low holiday volume. We weren't sure how significant that really was, but you can see we did, that did sort of follow through, and we did pull back to the 21 exponential moving average. We went a little bit lower. Now we're pushing back up to the high side. So the question is now, are we going to retest these highs? The high of this candle closing out last week around 16,166. And then what I'm looking at in terms of a macro bias, I'm still looking at upside potential and looking to see, these levels are still in play. 16,400 to, I'm going to have to zoom this chart out a bit. 16,400 to 16,700 are still the levels that I'm looking at. You can see that the momentum pulled down here on the slow stochastic. The MACD crossed over. So the question is, are we going to, roll back to the high side and show, that the momentum really has bottomed, like this sort of situation, here? Are we going to bottom here, push back up to the high side? Price action always leads everything, as you probably are well aware. So let's look at the S&P futures. Looks very much like the Dow. The chart looks very, very similar, and we're looking at potential targets still a little bit higher. Let's look at the Nasdaq. So if you look at the Nasdaq, the main difference here is we didn't have as deep of a pullback, and you can see the Nasdaq is obviously stronger for a number of reasons. Let's look at these key metrics. So the one main reason why the Nasdaq is stronger is because it closed at new all-time highs again. So I'm just going to abbreviate that. So we closed at new all-time high. So the Nasdaq is obviously leading the other indices. There are no real divergences in the background in terms of, except for the MACD. I mean, this is a little bit divergent where we're hitting new highs in price, and the MACD did not hit new highs. So that is a pretty significant divergence. But having said that, the MACD's rolled back up to the high side. The stochastics didn't really pull back much at all, and you can see that we're at all-time highs. So this is the only cautionary chink in the armor that I see for the Nasdaq. Right here is this potential divergence in the MACD. But having said that, we're pushing higher. We're at new all-time highs in the Nasdaq. So I think the Nasdaq is really the place, in my opinion, to potentially look for opportunities, because it is on a relative basis, it is the strongest market, is outperforming the other indices. Let's take a look at the Russell. So the Russell looks much more like the Nasdaq, much more like the Dow and the S&P. Let's jump over to the dollar index. So you can see the dollar index had on Thursday, it had a flush down into this. You can see the market seems to like to jump levels. Once you're able to identify some key levels on your chart, you can see the market almost gravitates to those levels. You can see 80.21 was a key level that we had marked on our chart because of these previous, tests, retests, breakouts, breakthroughs, standard support and resistance analysis. And you can see that the dollar index has come right back down to 80.21 and it's holding that level. And you can see that, the momentum is looking like it's starting to bottom. The MACD crossed above the zero line and now it's sort of holding the zero line there. So, same analysis as last week. I'm still net negative on the dollar index unless and until it can break through this this white trend line here. So that's sort of what I'm looking at for the dollar index. Let's take a look at the euro. So the euro is net bullish, and you can see we've got the potential to come up and test these highs. We were looking at these key levels here. If you look at, here was a high, here was the intermediate high, here's the intermediate low, and we came up, we found some resistance at the 618. We were finding a ceiling there for a number of days, 1, 2, 3, 4, 5, and then we broke through it on Thursday. You can see we put in a hammer off of that level, and now we're into the 78.6. So, the only real analysis I have on this is, or the only real opinion is, I'm looking at potentially, the 78.6 at 137.18 as potential resistance, and looking to see if we can jump levels from the 78.6 up to retest these highs around 138.28. So that's kind of the air that I'm looking at in terms of, if the market is going to remain strong, can it jump this level from here to here? That's about 100 ticks away in the futures market, or 100 pips away if you were looking at the Forex market. I'm looking at the euro futures here. Okay, so that's, there's a potentially 100 tick or pip move higher to retest those highs. It looks likely only for the simple fact that, momentum is still positive even though it's overbought. My trending indicator is positive. MACD is still positive, and it's cycled back above the zero line, back up to the high side off of this hammer with a little bit of pickup in volume here. You can see the volume has picked up a little bit. So I think that 138.24 level looks like a possibility. Let's look at the USDCAD. This market has been pretty strong. We've been talking about, the breakout of this wedge. We've come up and we've tested 106, 107. And the question is, are we going to hold this 8-period exponential moving average? And are we going to push into 108 to 110? I think those levels are still a possibility. They're still in play. And I think that from my perspective, looking at this, momentum is overbought here in the slow stochastic, but the fast stochastic is pulled down, and it looks like we might get a bounce from there. So, markets that trend can stay overbought for quite a long period of time, as we've seen in the stock indices recently. And I think that, the trend is higher in the USDCAD. And even though the dollar index is a little bit weak, the USD-CAD pair seems to be a little bit strong in favor of the US dollar. So I think the potential is still, we still have the potential to the upside, although we could see a bit of a pullback from this level. So as long as we hold this trend line, or we come back and we retest the breakout point of this wedge, I'm still net bullish on the USD-CAD at this point in time. Let's jump over to the crude oil. So the crude oil really caught a bid this week, and it looked like we put in sort of a bottoming pattern here. So this was really confusing. I mean, we were talking about finding support at 94, and then, I was looking for a bounce off of $94 a barrel. And then last week, the analysis last week, it kind of confused us because we fell and we broke that level, and it looked like we were going to sell off from there. And now you can see all we did was, roll back around. I call this pattern a U-turn, where you think you have a support level, it breaks that support level, and then it comes back up through that level. I call this a U-turn. It's not a technical term. It's just my own sort of terminology for, for lack of having any other description of this sort of anomaly in the market. I call it a U-turn because it, I'll just explain that one more time. It finds a support level. It looks like it's going to push higher. It breaks that level, then it comes right back up through that level, and then it doesn't look back. I call that a U-turn. So it did a U-turn right through there, and you can see it broke this trend line here, and now it's finding resistance up around $98 a barrel. So the question is really, are we going to come up and test $100 a barrel? When you look at this from a macro basis, I don't really see why not. If the US dollar index remains weak, I think the commodities could catch a bid and move a little bit higher. One thing I do think that is in the favor of the oil, even though it's short-term overbought, is the fact that you've got the 8 period moving average crossing above the 21 period moving average here. This is sort of like a buy signal in a sense. And, I don't just buy just because that happens, but this is sort of, this is telling you, especially when you see a trend line break here as well, this is telling you that, this has become a little bit more bullish than bearish. The break of the trend line is more bullish than bearish, and the MACD crossing back to the high side, that's more bullish than bearish, but we are short-term overbought. So I'm looking at this from that perspective, saying I think oil has a potential to go higher. So I wouldn't be surprised to see some sort of a pullback. I'd like to see a market structure of a higher low put in place here to confirm that it's going to go higher, puts in a higher low, and then it pushes off. That's sort of the scenario that I'm leaning towards at this point in time, and then you establish some sort of a trend line off of that higher low. That's the structure that I'm looking for going forward in order to confirm that we do have a trend change in place, because this is in the short term is telling us that there's a potential trend change in place, but until you have that structure in place, you don't really know for sure. So I think I've explained that one sufficiently enough. Let's take a look at the natural gas. So the natural gas, we were talking about potentially coming into $4.24. This happened a lot quicker than I thought. We didn't quite make it there, but you can see here the trending indicator. Let me just change the color of this. My trending indicator, which is sort of a proprietary algorithm that I've written over the years to measure the trend. You can see that it crossed over negative at this point over here, and even though we had a bounce, we've essentially been lower, 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 and then we started putting in a bottom here. We were talking about a potential bottom in this area, but you can see now that this has crossed back up to the high side. This is something I was discussing with one of my trading room members about, where I said, now that this has crossed over to the high side, I'm going to change my pen to green now. Now that this has crossed over to the high side, I'm not really interested in the short side. In fact, I wasn't really interested in the short side on the natural gas. I was interested in the long side off of this low, this potential low. We didn't know it was a low at the time, but that potential low. And now that my trending indicator is rolled back over to the positive side, I definitely am not interested in the short side. Now, having said that, we could come all the way back into that trend line. But what I'm looking at here is I'm looking for a bit of a pull down. I don't know how, could be very shallow, but I'm looking for this move into $4.24. We're almost there. We're almost there on Friday, especially off of this huge bar on Thursday. I think that was coming off of some inventory news. There's always news announcements on Thursday with natural gas. So, we consolidated here, and it would have made more sense if we consolidated, pulled back, and then pushed through. But we essentially consolidated for a few days, and then we had that wide range bar right through this resistance level of 402. I thought we might have intermediate resistance at 408, but we powered through that, and you can see 408 just above that has provided support. Question is, are we going to come up here next week and tag $4.24, or are we due for a pullback first? Trying to look beyond that in an overbought condition I'm going to have to say, we're going to have to see what kind of price action takes place next week and reevaluate from there. So short term, I think 424 is still potentially in play. I think 408 is potentially support, and see if these moving averages can catch up. But I'm still bullish on this market as long as it's holding this trend line. So that's sort of what I'm looking at, projecting that forward. In fact, I'll do that right now. Let's extend that right. Okay, so I think the analysis on that is complete. Let's take a look at some of the metals. So here's the gold. I haven't been looking at the gold too closely, but the gold to me looks, like we've got some levels in play here. You've got the lows over here at around 1181. You've got the potential to come all the way down to 1050 potentially, which is a little bit lower, and I'll show you where that level comes from. That level comes from that level comes from another methodology that I was looking at if we break this low here. So that level I'm looking at potentially a move into 1050. But having said that, I'm a little bit cautious on calling a short here for the simple fact that momentum is really bottoming here, and we could see a move higher before we see a move lower. So if we do break, let's say we break these lows, then this is the level I'd be looking at. That's sort of the decision point. If we decisively break these lows that were put in place here, let me just change the pen. If we decisively break those lows, then I'm looking for a move into potentially retest these lows. And if we break those lows, I'm looking for a move potentially into 1050. Now, if we actually break these highs, then what I'd be looking at is for a retracement back into 1266 and even, potentially 1340. But having said that, I don't really think there's a lot of activity in the metals right now. And let's just be clear here, I'm not really interested in trading them. But if we were to get a pushback up to the high side, you could see a move into 1285 to 1300. Failing that with a break of 1200, we could see a move into 1180 and ultimately possibly into 1050. So those are sort of the decision points I'm looking at. A move higher would bring you into this fib zone, and I think a move lower would bring you into these lows and into those lower levels as discussed. So at this point in time, I think that you really need a decisive break of this sideways action either way. You've got some established risk in here simply for the fact that you put in some tighter range bars. They're not that tight, but you've put in, a doji on Friday. A break of that doji would probably indicate, a decisive break of the doji would indicate which way this market wants to go. Let's take a look at some of the other metals and see if they give us a better indication. No, silver, same sort of thing. We put in a doji. You can see the momentum is shifting back up to the high side. So I don't really like the short until and if that we can get a loss of momentum there, like possibly put in one of these kind of cycles where you cycle from lower to higher and then you roll back down. So I think we need to see that potentially in the metals to see any more downside at this point in time. At least, a little bit from a safer perspective. And let's look at the copper. So copper, if you look, copper is strong here. It's looking more bullish than bearish to me, even though it's getting into overbought territory. So, at this point in time, I think we need to keep an eye on copper. Copper may be telling us that the other metals want to go higher. That being said, I'm not really that interested in them. So let me move on to, let's look at the 30-year. I'll be honest with you. I could give you some sort of an analysis. I could give you some sort of analysis on this, but I really, I don't really have anything on the 30-year. It doesn't look interesting to me at all until it gets, until and if it gets out of this channel. I don't think it's really all that interesting, and it could retest the lows, it could push higher, but until it breaks one of these trend lines, I don't think it's really worth looking at. Let's look at the 10-year. 10-year, the same sort of story. I've got nothing on that. Let's look at the 10-year interest rate that moves opposite the bond. that could come in and retest these highs here. That's what it looks likely to do. Interest rates look like they're likely to come up and retest these highs. I don't think we're going to really get a significant move on interest rates until and if we can get a decisive break of these highs around 297.8, almost around 3%. So unless the 10-year interest rate gets above, 3%, I think that's really what would kick things off. And that's where I would start getting worried not worried, but that's where I would start having an indication that maybe interest rates are ready to start moving higher again on a decisive break. Not just, a poke through, but on a decisive break where we get a few bars decisively trading above $3. So I think that's really a significant level there in interest rates. That would put us at, I don't want to say all-time highs. The word I'm looking for is, we haven't been higher than 3% in a long time. So I think if we were to get above 3%, that would be sort of like an inflection point, telling us that interest rates are ready to move a lot higher than they have been in a long time. So I would expect some sort of, if the Fed and the U.S. government wants to keep interest rates low, I would expect them to try to defend that level there. So I'd be looking to see, what happens at that level. I think that's going to be an interesting study. I wouldn't want to trade it or step in front of it because it could get ugly and it could get messy. And, they've got a lot more firepower and a lot more bullets than I do. So I don't really want to play around in their sandbox and their playground in that area. So I think we've covered all the major markets. We could take a look at a couple of key stocks like, Google has hit all-time highs and it's put a hammer in off of that. Wow. Okay, it looks like it's closed at new all-time highs. And you can see this is a Nasdaq stock. Remember, we were talking about the Nasdaq on the relative basis outperforming the other markets. So that's really interesting. Google is all-time new highs. Apple is, it's doing well. It had a pullback, but it seems to be doing well. And, I think we should start looking at some Nasdaq stocks and seeing which stocks are outperforming and which sectors are outperforming. I mean, looking at doing that, into the near future as I start looking at more stocks on a day-to-day basis. So I think I'm going to wrap the video up from there. Don't forget we have a CSTA Oakville chapter meeting, the last of this year, on December the 11th. That is this Wednesday, December the 11th at 7 o'clock. So that'll be this Wednesday the 11th here. And we have William Chin, the president of the CSTA. He'll be talking about trading decision disciplines. And I will link you over in the announcement to this that's going out with this video. I will link you over to that page. So stay tuned for that. And please sign up, come out, show some support. But more than that, come out, even for selfish reasons, come out to learn a heck of a lot of good stuff about trading and investing plan development. So good trading, good investing, and we'll look forward to seeing you before the Christmas holidays at an upcoming meeting or at an upcoming video update. So all the best.